Trade war tensions between the US and China and talks of recessions causes increased investor fear and heavy selling of stocks in what has been a good reporting season so far. So is now the time to run for the hills or get excited about further market rises? I will discuss this and more in this week's report. Hello and welcome to this week's US Stock Market Report. I'm Gillham, Chief Analyst and Trading Mentor here at Wealth Within, and we're Australia's most trusted stock market educators. Now, just before I get into my thoughts on the US stock market, I wanted to say hello to anyone new to our channel. Remember, if you've got questions regarding US stocks or trading questions that you need answered by an expert, feel free to comment below as I'm happy to help. Now, before we move on, show your support for the channel and hitting that subscribe button and click that little bell on the right of it so you keep up to date with my latest videos. In this week's report, I'll be covering last week's heavy market sell-off, including what caused the sharp turnaround. I'll also cover my thoughts and advice for investors and what happened with companies reporting their earnings this week. Now, last week was an unforgiving week for shareholders as escalations in the trade war intensified and fears of a global recession panicked investors, resulting in heavy sell-offs to shares. So what caused this massive sell-off? Partly it was President Trump's announcement of a further 10% tariff starting in September on the remaining $300 billion in Chinese imports coming into the US that saw stocks fall heavily. The falls were largely due to the implication of the tariffs for US companies dealing with China and what the Chinese may do in response to Trump's announcement. The president also accused China of currency manipulation, which to me seems like the pot calling the kettle black. After the announcement that the US would be imposing the tariffs, China announced it would cease to purchase farm goods, and this sent stocks further into the red. This, together with the Fed Chairman Jerome Powell indicating potential further cuts after cutting rates for the first time in 10 years, and this had investors worried about slowing economies and, even worse, a potential global recession. In my experience, a global recession is unlikely, and the more people talk about it, the less likely it is to occur. On top of that, recessions are normally good for the markets. My advice for investors is to stay calm and narrow your focus. Rather than being concerned about global economies, it's far better to concentrate on your own portfolio. If your stocks are going up, then stick with them and have an exit strategy in place in case they start to go down. Now let's take a look at how companies reporting their earnings did this week. Now, despite overall positive earnings seasons, it was not enough to stop stocks falling heavily last week. Walt Disney, despite record sales, missed earnings estimates last week after providing the market with its third quarter results. Earnings came in at $1.35 a share, which was below analyst expectations of $1.76. Whilst initially expected that the $70 billion acquisition of Fox was to impact earnings per share by around 35 cents, it ended up being closer to 60 cents. Further concerns over the future outlook of the business also had speculators worried. Disney shares were down just over 2% for the week. I like Disney and believe they'll do well in the coming years, so keep your eye on it, and I'll discuss the chart of Disney a little bit later on in this report. Hsbc recorded second quarter profits up 4% to $6.2 billion due to increasing revenue and expense reductions. Initiatives to increase market share in both the UK, China, and unloading unprofitable operations continue to be the main focus for the company moving forwards. Despite the market's downturn, Linde, a multinational chemical company, beat analyst expectations with profit and sales topping estimates. Linde also raised full-year guidance for the second time this year. Shares were up around 2% for the week. Uber reported for just the second time since becoming a listed public company and reported revenues of $3.16 billion on losses of $5.2 billion. Uber's stock price was only down slightly. However, I suspect that the future of this stock is continued downward pressure for the foreseeable future. Kraft Heinz once again failed to file its financial results and the future does not look bright. Kraft shares are down around 73% since February 2017. Right now I believe there is further downside and this could lead the shares down to around $9.70 in the coming months before it finds support. So what do I expect in the markets this week? Well, let's get into the charts for our S&P 500 index update for the week. We'll also get into looking at some of those stocks of interest I mentioned earlier, and we'll answer all of your questions.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services license, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
I'm not sure about you, but I love weeks like last week where there's lots of volatility on the market and lots of things happening. I mean, it's one of the things that traders love is volatility, because when we have equilibrium or no volatility, prices don't really move, and it can be like watching grass grow in the market. You're going, come on, hurry up, let's move somewhere. And when volatility happens, whether it's up or down, it doesn't really bother me too much because you can make money on a rising and or falling market. But you don't want too much volatility. But again, as a trader, volatility is great because that's where you make the money. And it's interesting how the market earlier last week, a lot of people were worried, they were panicking, selling stocks. As we saw, it was a sea of red, only for the market to do better later on in the week. So it is a really good lesson for people not to really listen to a lot of noise on the marketplace. It really is about looking at your stocks, what you own, making sure you have rules around protecting them. And my mum used to say to me, hey Dale, it's not what happens, it's how you handle it. That's really what she talked about, and it's about having stop losses underneath it. It's like whether the market goes up or down, I don't really care, as long as I've got rules around what to do if it does either, and that's really what it's about. So if you don't have rules around buying and selling, then maybe you should get my book, Accelerate Your Wealth. It's available in bookstores all across the US. If they don't have it, just ask them for it. Dale Gillham, Accelerate Your Wealth, go and have a look at that. Or you can get it off Amazon, so get it off there. But let's have a quick look at the Dow, and you can see last week, on the screen, it's a monthly chart of the Dow that we've got here. And I'll just accelerate that up a little, expand that up a little bit for you. And you can see here after making the all-time high there, back at whatever it is, that's 27,398. This month so far, it's down a little bit. So you can see here it's gone down. So we've traded down for the month so far. From opening to there, it's only 2.2%, so nothing to be worried about. But the interesting thing to me is that it's the low here at 25,440. And it's moving up. This is the interesting thing. It's not pushing down. If I go to the weekly chart, you can see this is a candlestick pattern called a dragonfly doji, which means it's more of a reversal signal. That's not a confirmation of it. I know a lot of people out there say, I'm a trader and I know candlesticks, but when are they more stronger? When are they likely to turn the market? And these are the things a lot of people don't fully understand about. There are certain points in time and price where candlesticks work better and sometimes they don't, because I can find these sorts of signals all over the charts pretty much, and it's not hard to find multiple different candlesticks that haven't actually turned the market. But right now this is a bullish looking sign. If we do get an up week, and so if we get the price moving up above that 26,413, then it'll create a green bar and it'll be up. And if we do that, then I would expect the market high to be broken, that 27,398 to be broken in the not too distant future. But if we have a look at the daily chart, you can see, look at this. This was Monday, I think that's Monday 5th of August. It fell very, very heavy on Monday, and then bang, 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 it was up. So it doesn't matter. I mean, there's a Trump effect. Yes, he comes out and says some what I would call interesting things. I'm not really sure the president that you've got is really good for your stock market, but that's a whole new argument again. But right now the stock market is doing what you'd expect it to do. It's rebounding off that bad news, and it's really good reporting season there in the US, so it's really, really positive signs. Yes, the Fed Reserve did drop interest rates about 2 weeks ago. Yes, they came out and said they may do it again, but that's just nice, and that really is just nice. But right now I'm not too worried about the Dow Jones. I'm not worried about it crashing. But now it's time to get into our questions for the week. Now, I've got a question from Robert. He goes, hey Dale, I've looked at Kraft Heinz code KHC. I'm waiting for confirmation that it turns, and I can get a trend line on it. So looks like he's waiting for it to bottom out and turn so that he can start getting a valid trend line on it. I believe this will happen when it breaks the $33.78 mark. While I'm not trying to pick the bottom, I'm happy to wait for an entry point as a paper trade. I'm currently doing your diploma for trading, and I'm on module 5. So he's doing our government accredited course on trading. We have a diploma of share trading and investment, which is vocational education. It's quite high level. It's not high level in terms of level of complexity. It's just under university level, so it's a complete course. It's accredited by the Australian federal government. We are a licensed educator here in Australia, and we teach students all around the world. We've actually got students in the US, Canada, Europe, Asia, people who really do want to learn how to do it properly and want a quality course, not just from some marketing dude or some guy standing in his bedroom with a t-shirt telling you he could teach you how to trade the market. But it is an interesting question. So on your screen I've got a chart of Kraft Heinz, and as you can see, it's been really bearish for this stock, and a lot of bad news has been around about this stock, and you can see it's fallen heavily, and obviously this current month it's down, moving down to that low of 26.05 closing. Closing at 26.50, 26.05 is the low. So what he's waiting for is, as one of our students now, he's learning some stuff in the module 5 about what he needs to understand before he's looking for this to find some support. And right now it hasn't. So that email came in earlier on in the week before you see this big downward move. So his email came through around about there, I'd say, or not, sorry, there, and probably in around about there, or one of those 2 days up there. So before it fell out of bed and did those announcements. Right now I'd expect it to bounce a little bit, but Friday that did look quite bearish. So I don't think this is finished at this point in time, mate. I think it's got a little bit more to go, but you've got to be thinking it's getting to an exhaustion phase, because it has fallen really heavy. Where's my price tools that I want to look on here? Not one of those. I've got some price tools. There we go. If I put this one on, I'll just put it on up here, you can see it's fallen really heavy. I would suggest it's probably heading now down to sort of this $20.15 marker, I think, before it finds any support. But stay watching it. It's great to look at stocks like this for a paper trade, to look at how you're recognizing where it is, where the exhaustion of the trend is, where it's going to find its support, and what it's going to do, or how it does tell you that it's more bullish now, and confirming that it's bullish so that you can get into a good trade. All too often people try and get in really at these low points and not get in the right place. I'd rather give away that bottom section there, that 10 or 20 or 30, even 100% off the bottom, because if this game goes up to $35 or $36, I'm happy to buy it there, because it's safer to buy it there and better to buy it there than buy it too early and only for it to keep dropping out of bed. So don't bottom pick. The next question we've got is from, I'm not sure how you say this, Lacine. Thanks for a great analysis, Dale. Really appreciate your videos. Keep them coming. So that's for my pleasure, Lacine. Quite happy to keep doing these videos. I got one from JM. He said, thank God we had the Fed to stabilize the market and keep inflation low to boot. The Fed how do I say it? There's only one part of the economy, and there's a whole lot of stuff or metrics that go into making the market what it is. And the Fed's only got interest rates to turn up or turn down, and the Fed rate result dropping the interest rate a couple of weeks ago, which is the first time in 10 years the Fed's dropped the interest rate, and suggesting that they may drop them again, is a sign that the economy is slowing a little bit. But it really, to me, that's not the main driver of the market. It really isn't the main driver of the market. And there's multiple different metrics, as I said. So, but it is good to have them around to actually pull a few levers and everything else. It's just fine tuning little bits and pieces. That's really what it's doing. The next question we've got is from Kishan. I won't say your surname, Kishan, but Kishan, he says, hey Dale, I'm new into trading and just wondering, is there any way we can check pre-open market or scan it? Please let me know how and where, if this is possible. Now, scanning the market before it opens and looking at the pre-market open, looking at the pre-market open is pretty much next to useless to anybody. And I do see traders do this, or how I say it, would-be traders do this, or amateur traders attempt to do this. They look at the depth of the market before it opens, and they see all this buying and selling that's supposed to happen when the market opens. And it really is like watching a fictional movie. And you'll see and if you take a snapshot of that screen, let's say at 9 o'clock, and then you take it every 15 minutes from there, and then 10 minutes before the market opens, you do a snapshot every single minute, you'll see a completely different picture every single minute right through to the market opening. And once the market opens, it changes again, because there's nothing stopping you or anybody else putting a trade onto that market pre-open and then to take it off, cancel it. You can do that. So it's all fictional until somebody places a trade and somebody takes that trade. So handing over money and getting money, till that happens, nothing is happening. And scanning the market pre-open and close, that's what I do anyway, and we teach people to do that. But I don't use scanning managers. Whilst the software I use has a brilliant scanning manager, I never use it because it's not about putting your focus wide, it's putting it very narrow. If you narrow your focus, you'll be a much better trader. And it's an amateur mistake that I want to scan the market to find all the opportunities. And often you'll see these people, brokers especially, saying, we give you access to 4,000 different instruments to trade, or give you access to world markets and you've got 3,200 or 5,000 things you can trade. So have you ever seen a kid in a lolly shop with 5,000 lollies or 2,000 lollies or 1,000 lollies, and which one do they want to pick? It's a nightmare of choice. You're better off having 20 or 50 stocks in your watch list and just trading those, because you'll trade better, you'll have less stress, you'll have less work, you'll trade better, you'll lose less, make more money. Makes it simple. Trade less, make more money. That's really what we teach in our accredited stock market courses here. So if you do want to learn how to trade, let us know. But let's get into some stocks. Now we've got some stocks from the report that I wanted to look at, and obviously we've looked at Kraft, Heinz. Now I'm going to look at Disney, which we also talked about in the report. Now I do love Disney is a great stock, and especially as it's getting into streaming services and everything else from that subscription-based services. And obviously there's a lot of competition with Netflix and others coming in there. Amazon, Apple's doing subscription services, etc. like that. But Disney's got this huge library, so it's pretty hard to go past. This stock will be a great one moving forward. And the charts are telling me exactly the same thing. Even this, I mean, look at this big move down on the weekly chart here. It's come right back up to being on that top, and Disney does look good. You can see it dropped right down here on, what that date is. Let me put my pointer on it. Come on Wednesday, and it's just bounced back again. So I think Disney is looking good. So stick this one on your medium to longer term list of stocks that you might like to have in your portfolio, because you can see here, if I open that up, and if you want to have a good look at Disney and trading it, it's in my book. It's one of those stocks I trade in my book. But look at that, it's a beautiful stock. Outside of this sort of period, but it did really, really well. Right now, I love this stock. The next one is Linde. Proprietary. It's a chemical company, big, and look at that, it's massive, beautiful trend moving up there. Right now it's just come back a little bit just to adjust its momentum, because it did accelerate a little bit away. You can see that acceleration through here. So to me, it really is just a good looking stock at this point in time, and just coming back. And if I put my trend line tool on it, you can see the angle of that move. And then if I grab that, you can see how the current move is a lot steeper. So to me, all it is, it'd be coming back to that level. And if I put my thing back in here and just drag that up there, it is probably coming back onto that sort of angle there, I'd say, roughly, before it starts to move up again. But at this point in time, I think it is another good looking stock. I think people should be looking to put it on their watch list at least, if not put it onto their buy list. But look at your rules. What's your purpose of your portfolio? Is it a short-term, medium-term, long-term portfolio? And put stocks on those that are congruent with your portfolio. I talked about this stuff last week on our live stock market show. So the information on that show, even though I was talking about Australian stocks and doing the live show here in Australia, it is 100% as relevant to the US or any market, any in the world where I'm talking about portfolio construction, the styles of stocks in there. You just need to adapt it a little bit to your market, but it's quite simple. The top 100 stocks in the S&P 500 are where you need to be looking at those Dow stocks, because they're all in those top 100 on the S&P 500, but looking at that, weighting your portfolio heavily to some of those bigger stocks if you've got a longer term portfolio, if you want dividend yields. All of that's in my live stock market show. If you go onto our YouTube channel and you look at the playlist for our live stock market show, go and look at last week. It will really, really help you out with your portfolio construction. And also get my book. As I said, it's available in the bookstores across the US. and on live on Amazon, and I actually break it down specifically for you in that book using these sorts of stocks like Disney and like the other big stocks. Uber was the other one that's reported in the last week, and it is quite interesting how people like this Uber stock, and it was big fanfare when it did list. It's reported for the second time since its listing, and right now I can't see any positive stuff about this stock because it is bearish. It hasn't made money, it's not making money, it's never made money, and it's unlikely to make money in quite a long time actually at this point in time. So it's interesting how stocks cannot make money and expect to go up, but that's what happens when you're looking at Silicon Valley stocks. But right now this does look bearish to me, so it's not a stock that I would have in my portfolio. I know there was a lot of speculation about this stock, being a really good $200-300 stock in the not too distant future, and it might, you never know, but right now I'd keep my money right out of it at this point in time. It doesn't look that fantastic at this point in time. So look, if you have any questions for me, please make sure you comment below. It really does help me to understand what you're thinking of. Look at the stocks, US stocks. I'm happy to comment on that. If you do have any questions you'd like to ask me, do that. And before we go, remember to hit that subscribe button and little bell on next to it and support the channel to help us grow it. So hit that subscribe button right now before you go anywhere else. That's it for me this week. Good luck, good trading. Take care.